Now let's dive into crypto markets. We're going to have a word with tastycrypto head of digital assets, Ryan Grace. Good morning, Ryan.
Hey, good morning, Michael. Thank you for having me on the show.
You're most welcome. So first of all, the big news of this morning, First Republic's collapse. Your reaction to that, what does it mean for this sector and the markets?
Yeah, I don't think anyone's surprised. We're looking at a bank that, the writing was on the wall, right? We look at the last 5 days of trading activity in that stock, and I think it's down about 70% or so. So I can't say that I'm surprised. I think what does it mean for the markets? Certainly there's the concern that there could be more banks on the horizon that could face failure, could face FDIC receivership, but yet to be seen. I think when you look at what the Fed has done here, there should be ample liquidity facilities in place if you look at the Bank Term Funding Program. So I think we've patched up some of those holes. Ultimately, it might seem bizarre to people on the outside of this industry, but I think it's a positive over the long run for crypto. I look at something like Bitcoin, as a life raft here in this system, as something that there's been the argument that this is not an inflation hedge because look at what inflation has done and look what's happened to the price of these assets in the crypto industry. But if you look at this over a long run, this certainly is a hedge, in my view, to the debasement of currency, to the quote unquote money printing, to what the monetary authorities are going to continue to do here, which I don't think is over by any means. And the more stress that you see in the system, I think the closer we are then to getting out of this environment of pretty consistent rate hikes and the lack of liquidity or reduction in liquidity that we've seen.
Yeah, I mean, it was interesting when the news was starting to emerge. It was clear that the First Republic was very close to going under. The Bitcoin price rallied again. I think we got over 30,000 last week. We also like to attribute it to the fact that the consensus is on our big event, and we get this traditional consensus bump at this time every year. But look, we're back down again now. 28,571. What's happening here? I mean, is it being driven by these broad macro factors, or are we kind of more of a trading range?
Well, I think in the short term, there's certainly the macro factors that are going to have an influence here. Like, I don't look at this market and think that Bitcoin in the short term is immune from a stagflationary economic environment, from continued deterioration in the economy, from sticky inflation. I don't think it's necessarily immune. And again, we have to see where the Fed goes from here. I think it's unlikely that we continue to see interest rate hikes past this meeting, but it's certainly possible. That said, I think there have been a lot of encouraging kind of fundamental, if you want to call them that, developments under the surface. While we do focus on the macro at times, when you look at this as a network effect, when you look at participation in this adoption in crypto, it continues. You look at the positive developments out of the industry, as you mentioned, following consensus. I think a pretty positive, optimistic mood coming out of consensus from not just those that have been in the crypto industry for some time, but those that are also, as we are here in the traditional financial services space, where there is increasing demand from the end user, from the customer. There's increasing participation from those firms that a couple of years ago had zero crypto business whatsoever. So that's what I'm really encouraged about here, regardless of some of the still potential headwinds here in the short term.
Yeah, I mean, I want to get to that sort of the sense of the mood and whether or not you feel like we're leaving the bear market at all. But you mentioned the Fed. It sounds like you are on board with the consensus that we're looking for sort of a 25 basis point rate up, but it sounds like you're saying that's it. So what are we looking for in this announcement this week? Is there particular signaling that is important for crypto especially?
I think we've got to look at, what's the dot plot look like? I think from here, and I guess if we just take
for our listeners, right? That's the range of forecasts for when all the members of the committee foresee rates at a certain time in the future. Yeah.
That's right. So I think it's going to be important. I think it's also going to be important to see what Fed Chair Jerome Powell says in the press conference, obviously, what is the response to continued bank failures here in the U.S.? They're watching that, certainly. Maybe more importantly, we just look at Fed funds futures to derive a probability of increased interest rate hikes in future meetings. And so when you look at where we are right now, or as of yesterday, I haven't checked any updated numbers this morning, but I think it was roughly a 20% probability that you would see another 25 basis point hike here at the June meeting. So it's a non-zero chance, but I think just given the velocity of the hikes, how quickly we've moved, really unprecedented in terms of when we started this interest rate hike cycle just about a year ago, and Bitcoin was, I think, at 40,000 or so. I think they're going to likely take a wait and see approach. Things have slowed down, certainly, when we look at the economy. That said, we have not fixed the inflation problem here. Are you seeing a slowdown there? Certainly, and just naturally, given what you're going to compare against as we move forward, these numbers are going to come down. So you are going to see inflation fall, but is it going to fall to 2 to 3%, or are we going to get stuck in the 3 to 4% range? Which I think if you're closer to that 4%, you're going to see the Federal Reserve, especially with the jobs market where it is right now, you're going to continue to see that they likely could hike. I don't think that that's what's going to happen. I do think that you're going to see a little bit of a wait and see approach here, but that would be, in the short term, still a risk when we look at Fed policy.
Mm-hmm. And you mentioned the good vibe that you felt like, that people are feeling a sort of bit more upbeat at the moment. What do you see us in terms of the bear versus bull cycle? Are we still in the bear market? Are we coming out of it? We had an op-ed piece from somebody last week sort of suggesting that it was over and that, with the halving coming and so forth, all the pieces are in place for recovery here. What's your take?
Yeah, I think we're getting closer to the end, certainly. I would love to, I would be here singing a different tune. It is over. I'm feeling a lot more optimistic about price action. If we're able to break above 30,000 when we look at Bitcoin, maybe take out 32 on the upside, then I think you have some room to run. We really have been in that range of about 25 to 30 over the last month and a half, though. But when you look at what has been that catalyst following some of these bank failures, we have traded a lot higher. It's been a lot more positive. And at the same time, as we're nearing the end of this crypto winter, this bear market, we're starting to thaw out, I suppose. I mean, again, you continue to see these positive headlines that get ignored because of where we are with the price action. And these are things like just last week, I believe, PayPal coming out and opening up crypto transfers to its 60 or 70 million Venmo customers. You continue to see traditional financial services firms that are expanding their crypto offering. I think you continue to see an increase in demand for self-custody. You're seeing more and more wallets launch, for example. And I think these are all really positive signs when you look at the fact that this needs to see continued adoption for the price to increase, given a function of demand. What's really, really interesting to me, and I think it's a highlight of how early we still are, is when you look at some of the surveys that come out. I think earlier this month, Pew Research came out with a survey that said only 17% of U.S. adults have invested in cryptocurrency or invested in Bitcoin, but about 2/3 or a little bit over 2/3 of those respondents are very skeptical still of how secure this is and whether they should invest in it. So I think we're still at this stage where it's the equivalent of almost mid-early 90s. We haven't yet seen the e-commerce boom. I'm afraid to put my credit card in and purchase something online. I think that's the stage that we're at with crypto. So the point being, it's very early, and you're continuing to see signs of adoption, which is very encouraging.
Okay, one last quick go at ETH. Had a pretty good run after the Chapeller upgrade, back down lower again. It seems Bitcoin dominance continues, and you've noted that. Do you see opportunities there for the ETH price to recover, or is this going to track Bitcoin at this stage?
Yeah, I think, it still tracks Bitcoin at this point until we're really out of the woods. And you have, again, this hinges on more liquidity. This hinges on we've gotten past the Fed interest rate hike cycle. And it's very clear to participants that, we're going to put more money to work. And maybe even then, you still need the regulatory developments here in the United States to encourage that capital go into this system. But, I look at this and I think today, right now, when I'm going through these charts, I want to own the highest market cap tokens or cryptocurrencies. So that's going to be Bitcoin. if I had to pick between Bitcoin and Ethereum right now, just looking at the chart, it has, when you look at Ethereum, it has underperformed. So I want to own Bitcoin, and I certainly don't want to own any DeFi tokens. As compelling as those long-term opportunities might be, at this exact point in time, I think you want to own the larger market cap stuff until it's clear that there's much more of a bull market underway. And then you can get into the higher beta tokens or the kind of higher volatility investments that exist. But for now, I would stick personally with the larger market cap.
Alrighty. Well, thank you for that. That was Ryan Grace from Tasty Crypto.